A stock market index is made up of a basket of stocks that are chosen based on certain criteria, such as market capitalization, the total value of a company's outstanding shares, or revenue. Often, stock market indices are used as a benchmark to measure the performance of a group of stocks, and to reflect the overall movement of the stock market. There are many different types of stock market indices, each tracking a specific group of stocks or a particular market segment. For example, the S&P 500 index is one of the most widely used stock market indices in the world. It is made up of 500 of the largest publicly traded companies in the United States. Together represent about 80% of the total market capitalization of U.S. stocks. FTSE 100 is another index that tracks the top 100 companies listed on the London Stock Exchange. Other stock market indices may be focused on particular sectors or industries, such as technology or healthcare. These sectoral indices track the performance of companies within that particular industry or sector. These indices can be useful for investors who are interested in a particular industry and want to track its performance. Investors and analysts use stock market indices to track the overall performance of the stock market and to make informed investment decisions. If the stock market index is rising, it may indicate that the market is doing well overall and that many companies are experiencing growth. Conversely, if the stock market index is falling, it may suggest that there are challenges or negative economic factors affecting many companies. It is important to note, however, that stock market indices are not perfect indicators of overall market performance. Indices may not necessarily reflect the performance of every individual stock. Some stocks within the index may be performing well while others are struggling. So, investors should do their own research and consider their own financial goals and risk tolerance before making investment decisions. It could be the case that the stock market index is performing poorly, but an individual stock in which an investor has invested may be doing well. The prices of stock market indices can move up or down based on a number of factors. Factors that can impact the performance of a stock market index include economic conditions, global events, changes in investor sentiment, and the performance of the companies within the index. In general, if the companies within the index are doing well and generating strong profits, the index is likely to rise. On the other hand, if there are challenges or negative developments affecting the companies within the index may fall. In summary, a stock market index is a useful tool for tracking the performance of a particular group of stocks over time. But it is important for investors to use this information alongside their own research and considerations of their own financial goals and risk tolerance. Thanks for watching. If you enjoyed our content, please like and share it. And don't forget to subscribe for more videos. We appreciate your support and can't wait to share even more amazing content with you.